Diwali. It means a gathering with your friends, your families, lighting of lamps, as well as having the savory sweets. And as we usher in the Naya Saal and Nayi Shuruvaat at ET Now, we are here to help you with your journey when it comes to investments.
That's what we are here for. What happened in the previous year, what's likely to happen in the next year, which are the key themes with special guests. I am Pankaj Poddar. With me is Sheryll D'Souza as well as Vinnii Motiwala. We'll tell you what exactly happened in the previous year and what are the key themes to watch out for.
Absolutely, Pankaj. And we're going to bring in three special guests today. One being Vikas, Khemani, Pankaj Murarka and Gautam Shah, who will be giving us the three cracking ideas, dhamakedar ideas for Samvat 2078. So let's bring in our guests and have a nice chat with them.
So last year has been nothing short of a dream run for the market. 40% higher for the Nifty, 30% plus higher for the Sensex, and I mean multifold returns for various stocks. I mean the sector that you are in, probably except pharma and a couple of others, have done exceptionally well. So Vikas, let me start with you. What do you think were the cracking, the cracking year that we are just ending, or the cracking Samvat that we are ending? What are the learnings from this year, and should people extrapolate these returns, or returns expectations should get normalized from here on?
I think Pankaj, very clearly last year when around the same time Diwali, the fear was probably high and expectations were very very low, and I think year down the line it has completely reversed. We have a probably high expectations and probably somewhat low fear. So in last year, if you see, market kept on surprising at the pace of sort of recovery. Of course, there was positive surprise as well as a second negative surprise in form of second wave. But net market has done very, very well. I think some of the sectors like IT has been, have done very, very well, phenomenally well. Many manufacturing ideas have done very well. So multiple themes played, in this period. Real estate has done very well, over the last 12 months. So many sectors, which were kind of considered otherwise untouchable or not so preferred, have come out and done very well.
Right, that is Vikas's take on the markets and in Samvat 2077. But Pankaj, what's your take on the markets? Remember, realty sector and metals. These were the sectors that were actually investors fell out of love with over the past couple of years. But look at Samvat 2077 and what's happened with these counters, especially realty index. You've seen everyone fall in love back again with real estate. Was that for you also the same? Did you fall in love with these two sectors again?
Well, wish you and all your viewers a very happy Diwali. Talking about specific sectors that you mentioned about, so we need to keep in mind, I think real estate sector from a capital market perspective has a huge potential, because you put things in context. Real estate is about, as a sector, is about 10% of India's GDP, and it's a sector which absorbs about 40% of household savings. And when you look at stock markets, the total market cap of all the real estate companies taken together is about less than 3% of the total market cap in India. So obviously there is a huge disconnect between the value of real estate as a sector from an Indian economic perspective and its what it reflects from a stock market perspective. Obviously, given the fact that we've seen a very strong hiring from IT companies over the last 1 year, and that has percolated into strong buying in real estate in India, and I think that will sustain. So I remain extremely positive about the outlook for the real estate sector over the next 10 years. So I think the next 5 or 7 years will be relatively good for metal companies. Having said that, given the fact that the stocks have done extremely well over the last year and a half, they can go into some sort of a consolidation of cost for a while. But I think outlook for metal, if you ask me, remains reasonably positive from a slightly more medium-term perspective.
So for you, metals surely remains positive from a mid-term perspective. But Gautam, coming to you, what are you, 2077 somewhat, if you look at it, auto as well as Nifty, pharma, which are normally sectors that you see doing well, have not seen much of a growth compared to the other Nifty indices. So what are you making of that? And, do we see that trend continuing now?
Well, thanks for having me. Wish you, the entire team at ET Now, and all your viewers a very happy and prosperous Diwali. Well, coming to the markets, I think the scenario and the sentiment right now, I think, is very similar to what we saw last Diwali, because we were just out of COVID first wave. Markets had run up a lot. There was this confusion whether the markets can actually continue to rally, and it just continued, not giving importance to any level, or I would say any valuation number, because liquidity completely took over. And now, as we've got out of COVID second wave, you are hitting levels of 18,000 and beyond. And even now, there is some concern, whether this can actually continue. But I do believe that the last 1 year was all about deviating from the mean. And I think the next 1 year would be about reverting to the mean. So I think we've had a fabulous year. A lot of the positives are already discounted in the price. I don't think the indices can run up at the same pace. When I talk about indices, I'm talking about the headline ones. I think the market is going to be a lot more sector and stock specific going forward, and therefore you will have to work a little hard for returns. But coming to the two sectors that you mentioned, auto and pharma, well, auto had a fabulous 2020. It's only in the last 4 months that it's not done as well. Clearly, there are some headwinds on the fundamental side, and even chartically, there have been some issues. So auto, I think, will be a market performer. I don't see great movements there. And even pharma, an index which moved up almost 3 times in value from the 2020 lows, has underperformed in the last 4 to 5 months. So I don't see any immediate opportunity. I think the liquidity is now clearly moving into the underperformers. So we like real estate, we like capital goods, we like the banking space. We also like the PSU banks. I think the underperformers are going to be the basket that could give you serious returns over the next 6 to 12 months. So our view at Goldilocks is stay away from the high flyers of the last 1 year and stick to the underperformers. I think that's where the real return will be made.
That's been the focus in the market for a while. But Pankaj, when we just talk about the learnings of the last year, what is the sense that you get? There have been these e-commerce IPOs which are getting some great, fabulous response. There have been select companies within Tata Group, various other groups which earlier you thought could got bankrupt, but now they're completely re-rated. Certain select traditional companies, the likes of L&T, various others have done well. So what have been the learnings in the past year, key themes that you think would continue going into the next year, or these learnings which could do better in the coming year?
Well, Pankaj, I must say that, after a very long time, I feel very optimistic and excited about the outlook for the Indian economy. Even pre-COVID, if you recollect, there was a period of 3 or 4 years, right from 2016 onwards, where the economy was not in the best of the shape. So after a very long time, I feel very excited about Indian economy, and I firmly believe that over the next few years, 3 to 5 years, Indian economy will surprise all of us on the upside, including myself, despite I being optimist.
But Vikas, I want to come to you because you are one of the first people who had identified the Nifty 78. Is there more steam left over there?
IT has been a spectacular performance. It's done very well over the last 1 year. So many stocks have become 3 to 5x, from their lows. And of course, there's no doubt that demand environment is very, very robust. And it's not going to be only a short-term thing. It's a demand outlook which is changed structurally from next 3 to 5 year perspective.
Gautam, I'll come to you. And when we spoke about the market outlook, you did say that underperformers will do well going ahead. The word underperformers is pretty sensitive, very risky. So how do you identify which of those underperformers would actually do well in summer 2078?
Yeah, I think that's a good point. Underperformer is a very sensitive word. If you've actually invested into underperformers in the last many years, you would have been on the wrong side of things. And there have been so many false breakouts in the last 10 years. I mean, look at real estate. Every 2 years, there is an attempt to break out and it falters. So it was almost a trap which is being led for investors every 2 years, and therefore people almost gave up on it. Something similar with PSU stocks, despite such great dividend yields, anywhere between 5 to 9%, capital appreciation was never there for PSU stocks. But with what has happened in the last 3.5 months, I think this is a structural change. And the fact that they have started to outperform relative to the Nifty, I think is a game changer, because this is something that we've not seen in a decade.
Now let's straight dive into the top picks coming in from our experts to help you tide through Samvat 2078 and make the most out of it. So Pankaj, I'll come first to you. What's that trump card in your picks?
Well, the first stock I would like to, on which I'm extremely positive is the India's bellwether bank, State Bank of India. I think all of us know probably the largest bank in India, State Bank of India. Over the last 5-6 years, went through a cycle of corporate NPA, as a result of which their P&L was significantly impacted. But I think now the bank has emerged out of that, and probably we've seen during the COVID crisis. In fact, it emerged as one of the most, as a bank which had one of the most finest asset quality, even better than a lot of private sector banks. I think next year State Bank will revert back to its, strong growth credentials, as well as qualitatively on its balance sheet numbers, in terms of achieving ROE of 15%, which is what State Bank of India has always done historically. So I think the bank is in for a strong profit growth and book value accretion over the next 5 to 10 years.
And Gautam, coming right to you, which is your dhamakedar pick for Samvat 2078?
Well, firstly, a disclaimer. I think whatever I say, we might have recommended to our subscribers at Goldilocks, so please do take that into account. I think since I like real estate and I believe that this is the theme that will stay for the next 1 year, the stock which I'm picking is Indiabulls Real Estate. I think this is a stock which hasn't done nothing just for a decade. The recent, corporate development, management change, I think is a sort of a game changer, and the charts reflect that. While the stock has already done quite well in the last 3 to 6 months, I think the potential upside from current levels is huge, which I think the market is not understanding so much, and that's probably the reason the stock has underperformed just a little bit in the last couple of months. But if I have to take a 1 year view, I do see a 40 to 50% appreciation on this stock, and it is likely to outperform the real estate index. The charts are good. Weekly charts and monthly charts have shaped up after a very, very long time, and these are trends which will not reverse in a hurry. So we are quite confident, and we feel that to play the real estate theme, Indiabulls Real Estate is one of the better plays.
Vikas always likes IT and banks. So which is your first pick this time around? Would you like to give it from the banking space, Vikas?
Well, I think, and this is again, our portfolio company. So the largest portfolio company, what I like ICICI Bank. Again, you have heard that, the banking is expected to do well over the next, 12 to 18 months specifically, given the fact that, the NPA cycle is kind of behind us. The credit growth is kicking in, which are both very good for banking. And thirdly, I think if you see, mildly, increase in the interest rate always helps banks or lending institutions.
So Gautam, over to you for your next pick. Do you have anything from the reopened trade? Because we've seen slowly and steadily life come back to normalcy. Yes, we need to keep precautions, but do you have any of the reopen theme in your picks?
Yes, I think I love the unlock trade. I've been a big bull on it for many months now. I think we went through a black swan in 2020, which I guess India and the world was not prepared for. So I think the unlock set of stocks, I've probably seen the worst. I mean, probably seen the worst in decades. So in that sense, I think the opportunity is huge. Thankfully and hopefully, COVID third wave does not come. Actually, that's what the market is factoring in with what has happened in the last few months. And if it continues this way, I think the stock which I'm picking is PVR. I think I really like the stock setup. It's gone through its consolidation for the last 6 to 8 months. It's a marquee name. It's an industry leader. It has great institutional backing. Movies are about to open, in a month from now with the first major release, on November 5th on Diwali. So I do believe that PVR has the potential to get past lifetime highs. Maybe a 30 to 50% up move from here is quite likely. But I do like a number of stocks, but I think PVR offers great risk reward. And it's the kind of stock which can do well in difficult markets as well. So I'm very comfortable, PVR at current levels on every small bit.
I believe that Pankaj Murarka also has unlocked trade or a trade relating to people going out. So Pankaj, what will be your next pick?
Yeah, I'm very positive on Aditya Birla Fashions. I think it's the largest branded apparel player in India, and I firmly believe that as the economy unlocks and life normalizes next year, we'll see revenge spending coming back in Indian economy as well, like we've seen in the Western world as those economies unlock. consumers have not spent for a long time and they haven't gone out. So I think everything that relates to discretionary consumer spend should do well. And Aditya Birla Fashion being, as I said, the largest branded apparel player, should be a big beneficiary of that. They've used the last 18 months of crisis to make their business far more leaner and agile and cost efficient. And they've made their balance sheet leaner, corrected their capital structure, and also have done few acquisitions. So I think as consumers step out and consumer spending increases, Aditya Birla Fashion should do significantly well. We firmly believe that the company can do a high teens kind of a cash flow growth over the next 10 years. So that makes us extremely positive on the outlook for the stock.
Vikas, what is your second pick? I see the infra space coming in L&T. So, what is making you so positive on the stock?
So I think L&T is, as we know that capex cycle is picking up in the country across private as well as public. We are seeing big amount of spend happening on infrastructure, real estate, factories across the board. And this is the one company which is leveraged to the country's infrastructure building. Again, within private as well as public, I think there's no company which comes close to L&T's capability across various segments. So I think, when the bet is on the spending happening on the capex, L&T becomes the obvious beneficiary. And funnily enough, I think if you just adjust for the market cap of the subsidiaries which is there in the IT space, L&T's market cap is lower than or pretty much similar to what it was in 2008. So I think while company's size has become significant, but value still is not captured. So and the company has itself done a lot of work in terms of efficiency improvement, ROC improvement, divested a lot of capital guzzling businesses, and still some more left. So I think if Indian economy has to do well, there's no way L&T cannot do well. And more importantly, I think it's also leveraged on the IT sector through its subsidiary, which is larger value. So I think you can capture through one stock both themes, which I'm bullish on. So I feel the risk reward of remaining invested in L&T is significantly in favor of investors at this point in time.
Gautam, quickly, what will be your third pick for our viewers and the rationale for that?
Well, I'm picking a new age business. This is a stock which hasn't done so well in the last 3.5 months, but I think it has great potential, and that is Route Mobile. Now, a lot of market participants might not understand this business, but I think the kind of model that it has, I think it's very futuristic. And I do believe that if things work out the way they should and what the management is trying to do, I think over the next 5 to 10 years, this stock can generate tremendous value. And this is one of the fewer stocks, which has done very well post-listing. It's a very nice, clean-looking chart, making higher tops and higher bottoms at regular intervals, and it does not get impacted of market corrections. You have some large marquee investors, HNIs, who are into it. The earnings trajectory has been excellent if you look at the last multiple quarters, and the commentary has been great. And obviously, on top of it, the chart setup is fabulous. So this underperformance of the last 2 months, I think, is an opportunity. The downside is limited, just about 10 to 15%, if at all, but the upside potential is huge. So this would be my third pick, this Diwali.
And Pankaj, coming to you, we have Tata Motors, which I'm seeing in your picks, is coming in, and obviously they're entering the EV space. What is your rationale behind Tata Motors? Where do you see it going next year now?
It's very simple. I think as far as Tata Motors is concerned, it's a company which is firing on all the 3 cylinders, and there's option value of the EV, which you mentioned about. So essentially, one, I remain extremely bullish on commercial vehicles segment in India from a business outlook perspective. I think over the next 3 years, if the Indian economy is going to grow at an about 8% or so average, commercial vehicle will be the fastest growing segment in the entire Indian economy, growing at about 25% CAGR over the next 3 years. Tata Motors, being the largest commercial vehicle player in India, will be the big beneficiary of that. When it comes to passenger vehicles, I think again we'll see a very strong growth in passenger car demands in India over the next 10 years. We've seen Tata Motors share in passenger vehicles go from 4% to 10% now, and that is further increasing. So I think with a reasonably healthy share in passenger vehicles at about 10-11%, as the passenger vehicle demand recovers, Tata Motors again should be a big beneficiary of that. And finally, they have a big global luxury car business in JLR, which hadn't done well for the last 5 years, but I think that business has turned around significantly. and is going to reap significant dividends for Tata Motors over the next 3 years. So they're firing all the three cylinders, and there's always an option value of EVs, because today, while the EV segment overall is small, Tata Motors has about 75% market share in EVs in India. So as EVs grow in India, Tata Motors will be a dominant player in that segment, and that will be an option value that will play out over the next 5 years.
Tata Motors firing on all cylinders, definitely one of the top gainers in Samvat 2077. Vikas, what's your third pick and the final pick for our viewers?
I think I would say I would go for LIC Housing Finance. Again, if you see stock hasn't done really well. Again, it is a bet on recovery in the real estate, credit growth on the housing finance side. And I think this is one of the companies which has one of the lowest borrowing cost on the liability side, or maybe closer to SDFC. But if you look at the valuations, are very much close to one-time book. So NPA cycle is behind. So I personally think that this company, as the credit growth kicks in, numbers start showing up, will not only deliver again 15-20% returns, but at the same time also can further get re-rated. It has almost 2.5 lakh crores of credit book. Versus the market cap of the company is around 20,000 crores. So I think there's a huge potential from here to get re-rated as the concerns around the NPA, which has been the past in last couple of quarters, which has been bottomed out. So I do believe that it's one of the again play which offers significant risk reward, safety as well as the potential of high returns.
That was the three aces from our three different viewers. Across the board, I think everything was covered, right from capex to housing to auto to various other sectors. Thank you so much, gentlemen, for taking out time for us. Wish you and your family a very, very happy Diwali, a prosperous New Year from the team at ET Now. With that, it's the end to this special edition show as well. Wishing all our viewers a safe, a happy Diwali, a good New Year, and of course, a great trading year next year.